Hi, Wales. Good morning. Happy Tuesday. I wanted to sort of zoom out and break down Tesla today in a very different approach, right? And I think it's very important for me to provide my sentiment, given that there's a lot of new traders, that's been following me, that's new to the investing game, and just trying to make sure that everyone is safe during these, especially, shaky times and choppy waters, right? So, coming from this mindset, the best thing to always do, guys, is to zoom out and see the overall structure of Tesla, right? What I like to do as well is that I'm here on the monthly time frame, and I go through every single time frame to see where Tesla has sort of the best supports throughout its history. And from what I see is the monthly time frame here, and I put on some EMAs and moving averages just to get a glimpse of sort of the main supports that I'm seeing. If you take a look right now, guys, Tesla loves these monthly moving averages. It likes to, sit on these moving averages, right? Historically, right? Every time we touched it, we bounced off. So if we're in a major correction right now, right, then I'm assuming that the moving averages, again, will act as major support, okay? So I know it's kind of scary, especially if you're in pretty deep on Tesla right now, but the moving averages from current levels, from pre-market levels, is about maybe 23% to 36% away, right? Lower. And I know that's kind of crazy to think, but guys, I've been in the markets. I know anything can happen, right? Surprises can happen. A lot of people are saying you should buy now, buy now. It makes sense, right? It makes sense because we are very close to the weekly 200-day moving average, right? If you take a look at sort of this last pivot as well, we are at the 618 Fibonacci level here, okay? So in my opinion, yes, there is a pretty good chance we actually can bounce maybe to, 354. Who knows, right? Who knows? But overall structure, just to give you guys some preparation, the main, levels that I'm seeing is this monthly level, especially if we get a correction on the S&P 500 of about, let's say 15 to 20%, okay? So if you take the entire fib structure from top to bottom, from the very beginning of Tesla, you can see the actual 618 level is sitting down here closer to 186. All right. And that sits right on top of the EMAs. There's a lot of great confluence there. And you can see that there is also a trend line pushing across, right? So you see that trend line, you see the 618, you see sort of the EMAs. Everything is confluent around these areas. Okay. Yes, we can get a short-term bounce, right? And come down. Who knows, right? But I'm just saying that is an area where, in my opinion, if we do get a major correction on the S&P, just know that Tesla can come down 20, 30% towards these levels, okay? I want to take a look at the S&P for you because if you also take a look here, guys, the last time Tesla was so far away from these EMAs, because typically, guys, right, there's always uptrends and dips within those uptrends like this. Okay, stocks do not go up all the time, right? There's always dips and flows. So if you can take a look, we're going up, dipping down, going up, and now the question is, are we dipping down? Right? Are we dipping down? Well, there's a big case that yes, we could have a possibility because if you take the fib structures, we are literally at the 1-to-1. I told you guys many times before in my videos, we're at the 1-to-1, which means that people, institutions that bought the 2022 dip, 2023 dip here, they're starting to trim off profits here. Okay, they're starting to accumulate cash, right? Warren Buffett is accumulating cash. A lot of CEOs are also selling shares, right? So is this the dip here? Was this the top? That is the question. And if that's the case, guys, right, remember, stocks move like this, all right? So if you're taking a look at this, guys, right? Who's to say we can't do this as well, okay? So if that's the case, we do have a potential monthly EMA, right? Moving averages that I love to see. It's respecting it really well, right? You have a potential downside on the S&P of, let's say, 20 all the way up down to 30%, guys, right? That's huge. That is huge. So you got to be prepared here that just like smart money, you're not over risking, especially at the top of these levels, all right? You can start slowly building in positions once it gets to 580, once it gets to 508 on S&P, right? These levels make sense. But until then, guys, just you got to be extremely careful here not to over risk. I've been telling everyone this every single day since the beginning of this year. We're getting to very toppy levels here. Okay, getting very toppy levels. Um, yes, of course, markets can overextend, right? I could be a year too early, right? But the S&P needs to show me right now, guys, that it can push from these levels. Okay, because we could be getting sort of something like this. All right, all right, the same length, right? Let's say top to bottom. We take sort of the same ratios. Yeah, it'll be right here on top at 478. Okay. All right. Just be mindful, guys, of where you guys are. So with that said, just be careful on Tesla. I just wanted to give you guys a sort of, you know, a zoomed out look in terms of what could happen, right? Worst case scenario, if the S&P does fall 10, 30%, 20, 30%, whatever the case is, just know Tesla will most likely react the same. And historically, Tesla has been using these moving averages as its main support on the monthly time frame, guys, on the monthly time frame. There will always be intraday bounces. There will be bounces on the smaller time frame, right? We could bounce here, right? We could bounce here, right? But just know that if ever we do get a correction, take a look at this trend line that I formed, right? Take a look at sort of these major buy zones down here around 180, okay? That's just what I want to make sure you guys are aware of just in case. All right, until then, I'll talk to you guys soon.
Yeah.